Hi everyone, this is a MCQ based on the CMA question, the US CMA questions. Yeah, one of the question, this is my like first MCQ serious question. So let's start with the question. Like this is a question based upon a thing like the net income. So whenever you're answering any MCQs, just go for the last line. Don't read everything right from the beginning. It's one of the easy way to tackle everything because when you know what you need to find, you can eliminate whenever you're reading what are the unwanted, unnecessary data, you can eliminate it. Okay, that's the reason. Okay, let's jump to the question. Like this is a short question. I mean, I've done a full video on it, so you can look into it. The question is based upon the thing like you need to find under which of the situations will the company report lower than the actual net income. So it's related to something related to the net income. So let's dive into the question right from the beginning. A company missed the recording the purchase worth of $10,000 in the current year income statement. So there is an error of omission. So they missed then purchase entry. So obviously they missed it. Okay, no problem. So the question is, while finalizing the financial statement, the company account deducted. Wow, that's great. The error and the error. Direct there, okay, and partially corrected. Yeah, what to do? If he completely didn't done it, it won't be a question. So he made the correction, but partially. So this is the thing. So the everything is related to income statement, not to the balance sheet, not to the cash flow statement or equity statement or any other things. It's only related to the income statement because they are asking the question is related to the net income. So let's dive into the options. And before that, let me show you the journal entries. Like there will be two possibilities. If the purchase they made, there might be the two possibilities. One is it might be a cash purchase account debit $10,000 and cash account credit $10,000, or else it will be like purchase account debit $10,000 or accounts payable credit $10,000. Okay, it will be there, but only the purchase in both situation. If you look, purchase is the only item which will go to the income statement item. So if you are if he made the partial correction, even if he adjusted the cash or even if he adjusted the accounts payable, then it won't matter. Okay, it's not the part of our question, just ignore it. So this is the thing. So what are the question, come up with the actual solution, don't look into the options first. Okay, what will be the actual entry? This is what they have done. They have made the partial entry. They may omitted the credit or they may omitted the debit. If they have omitted the debit, it will impact the income statement. So that's the question. So if they are omitted the credit, I mean they haven't deducted the credit account, or they have deducted the credit, they are just the cash account or accounts payable, but it's a balance sheet item, so it's not part of our question. So just ignore it. Why? Like as per the question, you can see the first option is like the accountant has reduced the cash. Obviously, if you make a purchase, you will make the payment. So maybe he reconciliate the balance like a bank up or cash books of account something. So he found out the answer. So it's not the answer. Yeah, it's a balance sheet item. Okay, option elimination is the best thing. And you can go for the option D. And you can go for the option C. Why? Let me show you. Because B is the answer. I will explain why it's the answer. If the accountant has only increased the accounts payable, yeah, obviously the liability is increased. So accounts payable is increased by $10,000. So it's not the answer. That's it. Either it will be B or it will be D, like 50-50 percentage probability. Like you can, if you're lucky, you can choose the best out of the both two, even if you don't have any idea what will be the answer. Okay, oh, the answer is B. Why? Because if accountant has only added the missing purchase worth of $10,000 to the cost of goods sold. If you increase the purchase, that means it's an expense. Practically opening stock plus purchase minus closing stock is cost of goods sold. He added the missing purchase only. So they added $10,000 to the purchase. So there is an increase in the expense. If the expense is increased, it will damn sure reduce your income. I mean the net income. So obviously the answer is B. Then why not D? Read the option. If the accountant has reduced the inventory by $10,000, there be two possibilities. But the option is incomplete. If you look the option B, it is complete. They made the adjustment in the cost of goods sold. But in the option D, they haven't said anything whether they adjusted in the income statement or they have made an adjustment in the balance sheet. So that's the reason the option is B. There is a full video about explaining everything, each and everything. So you can watch it. That's the thing. Thanks for watching. but I hope you can understand everything. The keyword is partially corrected, and the recording the purchase, it's the important thing, they missed it. And the impact is on the income statement. This is the three keywords. And if you go for the options also, the keyword is like missing the purchase worth in the cost of goods sold. I mean, cost of goods sold. If you look at the D, they haven't said the option itself, it's not clear. That's the reason, go with the B. It's full, precise, concise. If you go B and D, if you give the B and D, you can think like the basic knowledge, you can go and answer. It's obviously the B. So I have explained everything by line, scenarios also. The option D have two scenarios. I explained the both, but option B will be the correct. And I have explained the T account, the for a complete omission, actuals, everything in another video. If you want to watch it, you can watch it. Thank you. Bye.